some names once again today. Yeah.
Well, even in the large cap space, there were quite a few interesting stocks moving up. So ONGC went home as the top Nifty gainer. FMCG, of course, we'll talk more about it. The Nifty FMCG index was the best performing sectoral index, and there you had names like ITC, HUL, Tata Consumer, Nestle. IT2 saw some buying. Remember, earnings kickstarts on Thursday post market hours with TCS. So in the beginning of the trading session, it was Wipro, and then HCL Tech also joined in towards the end. The PSU banking, though, was under pressure. The Nifty PSU banking index was down close to about 1.5%, with names like Bank of Baroda, Union Bank under pressure. But let's also tell you what we have for you on our show today. We start with the top movers and shakers of the day. Vivek is there. Lots of business updates came in from FMCG stocks like Marico and Dabur. We'll get you the key reasons behind their up move. We also delve into the key market events to watch out for tomorrow. But first, to the big movers. Vivek, it's over to you now.
Well, thank you so much for that. As you mentioned, today was the day where you actually saw quite a lot of the FMCG names do very well in the session. So the entire FMCG pack, most of them that came out with the operational updates as far as Q1 was concerned, and even some of the names, that are yet to disclose their Q1 quarterly performance. So have a look at names like Dabur, Marico amongst the top gainers today. ITC, HUL also did quite well, and Adani Wilmar, very strong update coming in there. Stock cooled off from the highs, but still ended over 2% higher. The second stock on the radar was one from the life insurance pack, HDFC Life. Very strong operational update coming in as far as the month of June was concerned. Stock ended near the high point of the day. The other set of stocks that we were talking about is the entire railway PSU pack. All of the stocks continued their move higher. In fact, we also went ahead and did an analysis about how all of these stocks currently are trading at significantly higher PE multiples compared to where they were even just a couple of months ago. The next stock on the radar was Kalpataru Power. A very interesting note coming from Investec today on the entire power as well as power utility space. Stock cooled off towards the end of the session, but a buy rating coming in over there as well. On the other hand, some of the stocks that saw some weakness in the session today. First on the list was Bank of Baroda, almost 4% lower, ending near the low point of the day. Weak operational update, especially when you're comparing it to the other banking peers. AU Small Finance Bank, while the loan growth over there was not very weak, the street is concerned about the loan to deposit ratio at almost 93%, much higher compared to its peers. The stock lost almost 4.5% in the session. The third stock on the radar, one among the top Nifty laggards, was Titan. JP Morgan downgraded after the weak Q1 upgrade. A lot of analysts have gone ahead and given EPS cuts as far as Titan was concerned, especially the underperformance compared to Kalyan Jewellers. And lastly, the entire pharma pack today, all of them saw bought a profit booking. Divi's Labs almost 4% lower. Mankind, Natco, Cipla Granules, all of them ended lower in the session today.
Okay, thank you very much for that. Anand Tandon and Shilpa Raut of Prabhudas Leeladhar are with us on the show. Anand, Shilpa, thank you very much for joining in. Anand, particularly want to talk about these railway companies. They've been a big beneficiary of the infrastructure spending, the expansion of our railway network. The order books have been swelling, but so are the valuations. Now, it's great if you already own them, but if you don't, is there any railway stock which still is okay, even if you have a long-term horizon, you're willing to hold on for 5 years? Would you bet on any railway stock?
Short answer is I would not. We are in a built-up market. The market will give you an opportunity to make lots of money. Most of them are already priced to perfection and then some. You cannot expect that anything which is related to the government will continue to grow at 40% year on year for the next till perpetuity, which is what many of these companies are now pricing. So I would be very cautious of them at this level. However, as you mentioned, if you own them, stay on with some kind of trailing stop loss. At least they are not companies which are going to vanish overnight.
Shilpa, same question to you. Technically, any railway stock looks attractive, promising just over the near term?
Yes, Rima, I think IRCTC from the FNO pack is still looking very attractive. It can do 1100 to 1120 zones. As long as it is holding above 1035, I believe the stock is very well placed for that higher balance.
Okay, all right. Coming to you guys with more questions in a bit, but the stock of the day was one of the stocks of the day was Titan. It ended with cuts of over 3% after reporting a sort of subpar performance for the first quarter. And Mangalam is here to tell us, some of the highlights here. Mangalam, take it away.
Well, if you look at the jewelry companies that have reported their first quarter update so far, Senco showed a growth of around 11% that came in today. Kalyan Jewellers grew about 29% in their India business that came in on Friday. And Titan over the weekend came in and said that their domestic jewelry operations grew at about 8% itself. And as a result of which the street thought that maybe, Titan's valuations, which are higher than the peers, and growth which is lower than the peers, could make it perfect for some profit booking as well. Titan stock is down 20% from the highs already, but still trades at a significant premium to the other listed entities. High gold prices, lower wedding days, as well as weak sentiment is something that Titan attributed the weak performance to, or weaker than expected performance to this time around. And brokerages believe that this will have a bearing on their margins as well. So JP Morgan has actually lowered their target price by about 5 to 6%, or EPS estimates by 5 to 6%. They've downgraded the stock. ICICI Securities too has cut their EPS estimates by 5 to 7%. They've cut the target price from 3,400 to 3,200 as well. And Goldman Sachs says that key competitors have done much better in the first quarter, which is a cause for concern. And Morgan Stanley says their margins are likely to be lower by about 11, by their expectations of around 11% as well. And this, even as the management told us that they don't see the margin growing beyond 12% in the medium term.
Well, 5 straight day of losses now for Titan, and in that period, the stock is down nearly about 8-9%. But Mangalam, talking about the FMCG pack, Marico surged 4.5%, Dabur was up nearly 3%. What were the key highlights from what the companies had to say?
Well, for both Marico and Dabur, two things really stood out. The first one was that demand has improved quarter on quarter, more so from the rural side of things, and as a result of which the consolidated revenue growth for both of these companies has been mid to high single digits as well, closer to mid single digits sort of volume growth coming in for both of them as well. For Dabur, what did well was their home care as well as healthcare verticals, and for Marico as well, we saw Parachute coconut oil as well as Saffola do well. The weakness that we saw for Dabur in some of their portfolios and for Marico in their value-added hair oil portfolio, they believe that will improve going forward, largely because they were seasonal in nature, or maybe the turnaround is around the offing. What also stood out for both of them was that the operating profit, despite increase in ad spends, actually grew marginally higher than the revenue, which implies margin improvement for both of them. So you would then say that why is it that the Dabur stock grew just about 2.8% in today's trading session, with nearly 5% up move on Marico? That's largely because over the last 1 month, Marico as a stock had underperformed Dabur, so maybe some of that underperformance was getting undone in today's trading session. Their commentary bodes well for the entire consumer sector, and that's what showed in all the other FMCG stocks that did well today too.
Okay, thank you very much for that. Anand, the improvement in the rainfall in the month of July is also aiding sentiment. I think the IMD said that finally now we have a surplus. So it's just 1%, but at least the deficit appears to have been covered. Anything in the FMCG pack? Because, folks are betting on consumption as a key theme in the budget.
That's right. I mean, obviously, among the various sectors, FMCG is one which will perhaps to some extent directly benefit from uptake in the rural economy. And the one thing that you can be sure of is that there will be a focus on trying to uplift the rural economy given the election results. In that context, therefore, companies like Dabur actually are natural winners, because you are looking at a presence which is a little more dependent on the wider market rather than just urban India. So far, most of the FMCG and consumer goods have been focused only on the upper end of the income segment, and that has done exceedingly well because that was a lot more resilient. I expect to see that getting broad-based. So to that extent, the various FMCG companies will generally benefit. That is not to say that there is too much upside that you should be factoring it in the near term given their valuation, but relatively they are now looking somewhat more affordable.
Relatively looking a lot more affordable. Well, let's talk about banking updates, right? This is again first quarter updates which came through from Bank of Baroda. We also had numbers coming through from AU Small Finance Bank. Both stocks were down sharply, 3-4%. Abhishek is here to tell us some of the finer details. Abhishek, take it away.
Well, to begin with Bank of Baroda, on a sequential basis, if you take a look,